think you know this, but we trademarked, if it stinks or can kill you, call us. So I say that because with the two different shops, we have the flexibility to help either way. Homeowners insurance has been on the rise. Conversations with many of our clients, most folks would agree that homeowners just aren't turning in the small claims that they once were. We really began to see a noticeable shift in 2019 due to all the natural disasters. There's also social inflation, which are rising jury awards and litigation costs, economic pressures, and of course, the pandemic on top of everything really threw everything in the insurance market for a loop. If there wasn't the right risk transfer, the restoration contractor's policy is going to pay out first, and then their insurance carrier is going to have to try to subrogate against the subcontractor.
Hey everybody, welcome back to another episode of Violand's GPS podcast, Growing Professional Skills. We are very, very excited for our guest today, a good friend, one of my best friends in the restoration industry and outside of it too. Really appreciate Mr. Ross Driscoll Jr. of Driscoll & Driscoll Insurance National E&S coming on, and we're going to talk through what is usually a kind of a dry subject, but I've asked Ross to come on and talk this through because if you know Ross, you know there's nothing dry about him. He's going to bring some personality, some excitement into the wonderful world of insurance for your business. So, Ross, thank you. Thanks for being here today.
Glad to do it. Appreciate you making the time and scheduling this. We've always been a big supporter of Violand, so always happy to help. Thank you.
This will be fun. Thank you. So for listeners who may not know you, and I can't think there's too many of them out there, but those that don't know you, can you share a little bit of your background and what you and your team does at Driscoll & Driscoll and National E&S and the differences between them?
Sure. So right off the bat, we are the largest supporter of fire and water restoration contractors in the country. We have two different agencies. So many of folks have heard of Driscoll & Driscoll, which is our legacy, call it independent retail agency, where probably 80 or 90% of its clients are restoration contractors. And we're licensed in all 50 states. We write every line of business you could imagine. But then what separates us really is that we have National E&S. We're a wholesale broker where we're one of the last independent environmental brokers out there. So retail agents must work with somebody like us, a wholesale broker, as we're a bridge between a retailer and the surplus lines insurance carriers that support the general liability, pollution, professional liability packages. So agents around the country send us hard to place risks, whether it's environmental, construction, or energy. And I think you know this, but we trademarked, if it stinks or can kill you, call us. So I say that because with the two different shops, we have the flexibility to help either way.
Perfect. And this is the purpose of bringing you on here today. And people are going to realize real quick, you are an expert in the insurance world for small businesses insuring their own companies. But there's a lot of trickiness to it. And there's a lot of misconceptions. And you being an expert, I want to just kind of pepper you with a whole bunch of questions about what people need to be aware of to make certain that they are fully insured, properly insured, and covered and protected, and things they may not think about. But before we get into that, tell me a little bit about how you got into the insurance side of the restoration world.
Yeah, so in insurance, most people either fall into it, or I like to joke that they were a SOB or a DOB, son of a boss, daughter of a boss. And I made a decision at a young age that this is what I wanted to get into. And so we're a second generation brokerage. But if I could tell just a quick story, my dad was actually a restoration contractor. So when I was very young, I remember after the Northridge earthquake in Southern California, early 90s, he was rebuilding apartment complexes in the San Fernando Valley and was performing commercial and residential asbestos abatement. So as a young boy, this is probably an OSHA violation, certainly an OSHA violation. I can remember putting on the spacesuit and going into buildings that had asbestos. So been around it forever. After he got out of restoration, got back into insurance, that's around the time that the absolute pollution exclusion came out in all of the GL policies. And from there, Driscoll & Driscoll and National E&S, we've really been on the forefront of helping insurance carriers tailor the environmental policy forms that are needed for restoration contractors for more than 25 years. So, like I said, I've been around insurance and restoration really my whole life. And before joining the family business, I was a contract surety underwriter at Zurich, one of the largest insurance carriers in the world. And I wrote performance bonds for contractors performing public works from anywhere from 10 to hundreds of millions of dollars. And so I have a real passion for managing the risk of all types of contractors, but really, the restoration folks is the bread and butter.
Yeah, well, as I tell my wife on a daily basis, what's the point of having kids if you can't throw them into some fancy garbage bags and tell them to go scrape up some asbestos? I mean, that's the whole point of it, right? So I get exactly where Pops was coming from that. And if you've ever met Pops, he's a character. He's oftentimes you'll see him at trade shows whipping around on a little knee scooter, although I know he's doing a little better now, but he's a blast to be around. And so obviously you've been in restoration a long time. You've been in the insurance world for a long time. That being said, what are the trends? What are the shifts that you've personally witnessed in insurance for contractors, for restoration companies over the last couple of years?
That's good. I think the biggest shift, many would call a challenge, if you will, would be the decrease in the insurance work that TPAs are referring just this past year. Across the country, homeowners insurance has been on the rise. Conversations with many of our clients, most folks would agree that homeowners just aren't turning in the small claims that they once were. So they might have fear of being non-renewed or their premiums going up even more. So some folks, they're just taking care of it themselves, paying out of pocket. I think more and more restorers are relying less on TPAs. They're having to invest in their own internal marketing. And it seems as everyone's strategy has had to evolve over the last few years.
Yeah, we're seeing that with a lot of our clients who do TPA work, that their claims through those programs have dropped over the last couple of years. And the ones that won't touch a TPA with a 10-foot pole, they're picking up a lot more of that extra work out there. And so it's something to think about as you're building your business out and where you want to go from here. But what are you seeing with insurance? Is it getting more expensive? Is it getting more restrictive? Both? And if whatever's happening, what's driving that?
Yeah. So before we talk about like what's becoming more restrictive, I think just really focusing on these last few years, looking at the overall market, we really began to see a noticeable shift in 2019 due to all the natural disasters. There's also social inflation, which are rising jury awards and litigation costs, economic pressures, and of course, the pandemic on top of everything really threw everything in the insurance market for a loop. And in the last 2 years, however, I'm sure everyone's felt that rate increases on commercial auto, excess liability have really been rising more than any other. So commercial auto, it's just nuts. It's crazy. I've seen folks paying 2 or 5 times more than that where they're paying just 5 years ago. Just oversimplified. Everything's more expensive. There is no more $5,000 fender bender if you hit a new car, right? And then excess liability, I mentioned, what some mistakenly call an umbrella, is up across the board. And many carriers, they've just lost their shirts completely on large auto claims. Excess premiums, right? They're driven by the underlying premium. So if your auto is under your excess liability, if your auto pricing's up, your excess price is going to be up as well. And so reinsurance, if you've ever heard of reinsurance, that's insurance on insurance, as crazy as that sounds, but all the insurance carriers purchase reinsurance. And that's really where it starts. So if reinsurance is not making the money that they want to, they increase rates on the insurance carriers under them, which then in turn, ends up with the consumer. So that has a huge impact on everything.
Sounds like you insurance people just get in a room once a year and just make crap up. Is that the case?
I wish. No, that's not it. You did ask about it being more expensive or more restrictive.
Yeah, is it more expensive? Is it more restrictive?
Yeah. So, it's funny because even when I ask an underwriter something along those lines, like, what do you think of this? The number one answer any underwriter will give you is, it depends. Right? So they're just trained to do that. That's how it is.
That's not frustrating at all.
Yeah. Some lines of business are not increasing near as much as like auto or excess. Like general liability has been pretty soft in the environmental market. Workers' comp has been fairly flat, very low rate increases there. Uh, Property, that's been steadily increasing. Like I talked about, like 2019, that's really when everything started, and it started with property. And we're still seeing carriers trying to catch up and pick up more rate in property, depending on where you're at in the country. And then, as far as policy forms, the environmental carriers that we partner with, they've tailored their restoration forms for this industry. They understand the risks. They know how to underwrite for them. But still, you asked about restrictive. Anytime a carrier comes out with a new policy form, would you imagine that it becomes uh, more forgiving or more restrictive? What do you think, Jeff? When a new policy form comes out, they're always going to be a little more restrictive. They're looking for more mouse traps, the ways to get out of claims. So, what's driving this? First, nuclear verdicts, right? What used to
Yeah,
be a few
absolutely.
hundred grand now are like millions of dollars.
Okay.
And some plaintiff attorneys are just setting ridiculous bars at what they think a cost would be for an accident or a death or something in their opening statements, right? So a jury hears that and they're like, oh, they got that just in their mind, the bar is set. On top of that, if you've ever heard of litigation funding, this is where private equity firms are giving advances to folks for future settlements. So you see private equity firms, they'll find a crazy accident or something in the news and find that person and invest into that, hire that attorney, give an advance, and then they take a piece. So, you got private equity folks in this that's also driving up these wild nuclear verdicts. And then I also talked about, reinsurance briefly. It really starts from top down.
So then you're seeing particular types of claims and losses that are spiking along the lines of the water mitigation, the mold, the asbestos, the liability. Is it across the board? Is some more than others? Is there things that a business owner really needs to be aware of or watch in their policy right now?
Well, I'd say, mold, you mentioned mold and
Yeah.
asbestos. Like mold and asbestos, those claims happen, right? Although they're not very frequent, they can be severe, but that's why we have insurance, right? You don't often see restoration contractors with the frequency of those type of claims. After they have it, they learn, they fix it, they figure it out. Really, the where the claims have been spiking is auto.
Hmm.
Commercial auto, like I said, it's nuts. It is the hardest line of business to write. General liability for the insured, unfortunately, it seems that most carriers just are too quick to settle, in my opinion. And it's to them, they look at it, it's cheaper to settle than it is to fight something. But that ends up hurting the insured because maybe something that they really didn't do wrong, but ends up being on their loss runs for the next 5 years. And they have to explain that at every renewal. So, yeah, I would say auto, and then just, general liability carriers are settling too quick on really all claims.
So are there policies then that the restoration companies are you're finding that right now you're seeing them either uninsured, not insured, maybe they don't even realize it?
So I'd say probably more underinsured
Okay.
in a time where litigation and judgments have just gone through the roof. It has to be excess liability limits. And I think a lot of folks just kind of get stuck in like this renewing every year with just $1 million in excess or $5 million in excess, whatever they have, and they just kind of get used to that. But as they grow, they have a bigger target on their back, and they need to look like, what are the limits that I'm carrying, and is that enough? Another one sometimes is Baileys. So Baileys is the care, custody, and control of other people's goods, right? So if you do contents, you're bringing things back to your facility, or you have a temporary facility, or even if you just have a pod out front of somebody's home, that's Baileys, right? All of the third-party administrators, all of the franchisors, most have like a $250,000 minimum. That's kind of the standard. But is that enough? Right? It may not be enough if you have a giant facility. You got 10, 20, 30,000 square feet. You're bringing all that stuff back. 250,000 is not near enough. So what I always tell people, it's a simple equation. what is the max number of properties that you can pack out at any one time, and what is the average value per property that you can have, right? So if someone's like, yeah, average value 50 grand, we can have 10 properties in here. Okay, 500 grand. Probably smart to pat that number a little bit, 10, 20% at least, because
Sure.
you're gonna have somebody's high valued things in your care, custody, control at some point. So that's the simple way to figure it out. And then as far as like uninsured things, there's a few coverages out there that they're not often required, but everybody should look at having them. The first is employment practices liability, right? That covers you for things like discrimination, wrongful termination, sexual harassment, all those type of things. And wage and hour is the one that's really the in vogue claim. And that's something that's not covered by general liability. Just think about anytime an employee sues the employer, that's employee practices. The second one would be cyber liability, right? And that's the phishing, the spamming, everything, right? If somebody gets access to all of your personal information and all that, these policies, cyber's really not that expensive. It's something that you should consider having. I'd say that 1 in 20 restorers probably have both of these. So it's one of those things, again, when everyone's trying to cut costs, they're not really looking at like, oh, I'll take that risk, but they're not very expensive, something smart to have.
So it sounds like a lot of the companies that are out there really are missing some of the things that are going to protect them, because eventually the chickens are going to come home to roost here. So if I've got a budget here and I'm starting out or whatever it is, what are the key policies? What does every restoration company have to have at a minimum?
Yep. So a lot of times, even just to get a license, you need to show that you have general liability.
Okay.
Right. So what most restoration contractors buy is an environmental package, which is general liability, pollution, and professional, all packaged in one. Yes, some people buy a separate GL and a separate pollution professional, but I am a big fan of having them combined. Then you don't have two carriers pointing fingers at each other in the event of a claim. Also, there's advantages of those policies that are combined. There's, like I said, those carriers are tailoring their policy forms for restoration. And a lot of times those policies are non-auditable. So GL pollution professional, the next auto coverage, which we've already spent a little time on.
Mm-hmm.
If you have employees, you got to have workers' comp.
Mm-hmm.
Excess liability to sit on top of these. And then everybody owns some kind of equipment. That's called inland marine. Right? So you want to insure the equipment that you've purchased. If something was to happen, you need to have a backstop there. And then I mentioned, people should have EPL, should have cyber, but those aren't always required. But GL pollution professional, auto, comp, excess, inland marine, those are necessary.
When you're saying inland marine, I'm going to assume that that's not for the owner's fancy boat that's parked in the warehouse, right?
No, that would be a personal boat. Yeah.
All right.
And I would imagine that that their CPA wouldn't let them purchase that through the business. But
you would hope, but we'll see. All right. So then let's take a look at, where do you see the biggest gaps then? Where do owners think they're covered versus what they're actually covered for?
Yeah. So there's a number of like common holes, common limitations. First is a sub warranty. So if you've never heard of a sub warranty, these are things in a policy that will have specific objectives that must be met for there to be coverage if there's a claim caused by a subcontractor. Okay, so sub warranties, there may be restrictive language in there that says you have no coverage if you don't hit all these objectives, or what we would call a soft sub warranty would have something in there built where if you don't meet all these objectives, then you have a higher deductible. So that's the first one. Second would be claims made versus occurrence. So if you're, call it a legacy restoration contractor, been around for many years, chance that you have claims made pollution or claims made mold. So we can talk for 20 minutes on the difference of occurrence versus claims made, but just in the short, know that occurrence is better for the insured, claims made is better for the insurance carrier. There's more risk for the insurance carrier with occurrence. And you value occurrence more than claims made. So if you have claims made mold or claims made pollution, that's something that's worth a conversation. We've also started to see more carriers put on open roof exclusions, whether you're tarping it or not. Certain carriers have language where if there's water damage or anything that comes in because of an open roof, whether you've tarped it or not, may or may not have coverage. So that's something worth looking into. There's also starting to be more limitations on water intrusion, even in addition to the open roof. If there's water coming in during your work there, they may be excluded altogether. Some carriers are putting on like a sublimit. So say you have $1 million of, per occurrence, they may have a sublimit for water intrusion for 50,000, 100,000, 250,000, but try to limit that exposure. But then also I've seen where insurance carriers will try to we'll call it tricky, where mold is covered on the GL pollution professional, really the pollution, but then it's not covered on the excess liability. And it's like, hey, as a restoration contractor, mold is one of the biggest exposures, absolutely needs to be covered on the excess. And then another one, the definition of pollutants, right? So in every insurance policy, the definitions are one of the most important parts to review. And pollutants varies from carrier to carrier. Some don't include virus. Some don't include bacteria. Yes, many of them read similar in the beginning, but it's one of those things that it's worth reviewing every year and seeing what is the definition of pollutants in the policy. And then one of the worst things I'm seeing is designated operations. So designated operations can be very problematic. Most policies will call our written broad form. We'll call it. They'll say, all this is covered except what's excluded. A designated operation policy will just give a description of what you do. So it might say mold, asbestos, reconstruction, water mitigation. And you're like, okay, yeah, that's what I do. That sounds good. But what about all the other things that aren't included in that designated operation? Are you doing any trauma? Are you doing crime scene? Are you doing are you cleaning out HVAC, right? Or contents, right? So if it's not in that designated operation, if it's not listed there, you may have zero coverage for those things. So I don't write designated operations policies. When I see someone else with a designated operation policy, I go immediately, the agent doesn't know what they're doing. They're just checking boxes, and could be very problematic for the insured.
Yeah, you insurance people are getting in a room and just making stuff up. You have to be. So, all right. So I'll take
not the agents and brokers, maybe carriers, but yeah, we're trying to find what's best for the insured, not limit their stuff.
Well, so take all those hypotheticals you just threw out there and said, it could be this, it could be this, it could be this, and take it into the real world here for me. Then, share an example of a claim, and I want you to use names, but I'm sure you won't. But give me an example of a claim where, it got denied. Owners didn't understand an inclusion or an exclusion, or was just missing coverage or information.
So for our customers, we really don't have that. It's very, very rare that we have folks that get coverage denied completely, right? Mm-hmm. That's why we're experts. Like that said, I've seen folks turn in claims for like contractual disputes. Mm-hmm. That's often not covered, right? That's contractual. That's a business thing. Carriers don't cover that. But a type of claim that I see probably more often than I'd like, it can definitely be avoided, are the claims caused by subcontractors.
Okay.
So too often, restoration contractors, they just don't have the proper risk transfer with their subcontractors. And, a sub that causes a claim, say the sub is the one that had some faulty electrical work or something, and there's a fire. If there wasn't the right risk transfer, the restoration contractor's policy is going to pay out first, and then their insurance carrier is going to have to try to subrogate against the subcontractor. All of that could be avoided, though, if there's a strong subcontractor agreement. This would ensure that you have like the proper documentation and you're being vigilant that you're getting these every time. So the things within a subcontractor agreement, right? And know that I'm not an attorney, but I've seen thousands of subcontractor agreements over the years, and I know what insurance carriers are looking for. And here are 5 things that should be in there every time. First, the backbone of every insurance part of a subcontractor agreement is the indemnity and hold harmless language. Next is having specific limits, right? Saying I want 1 million, 2 million for general liability, 1 million for auto, so on and so forth. Specific, not just saying, hey, you need to have these coverage, but specific limits. Next is having an additional insured requirement for ongoing, but even more important, completed operations. So additional insureds, some people goes, oh yeah, give me an additional insured, but a lot of times those are blanket, and they're only trigger where there's a written contract. So if Jeff, if I'm working for you and you're like, hey Ross, just give me an additional insured, but we don't have a subcontractor agreement, then my agent's going to give you a certificate. Hopefully it lists that I have ongoing and completed operations for the additional insured. You got that, it's in your file, cool. But if you didn't have a contract with me, my carrier is not going to step up and let you jump into my policy, make a claim on my policy. So that's important. Additional insureds for ongoing and completed ops. The next is waiver of subrogation. And 5th, primary non-contributory. So I'm happy to chat with folks more about this, but I'd also say check in with the team at Violand, folks. Tim Hull and I, we put our heads together a couple years ago, and we created a sample that I feel is very strong, right? I recommend giving it to your local council, having them tailor it to the specific things that you need for your state, but there's a very good sample available through the folks at Violand.
I appreciate that. And I know Tim was excited when you guys put that together and put that out there, and we use it with our clients. So it really does sound like subcontractor exposure complicates insurance coverage.
Yeah. But it doesn't have to complicate if you have the right risk transfer. Right? I always tell people, like, if you're not pushing risk down, there are times that your carrier is going to have to subrogate. Maybe you have to pay a higher deductible, or sometimes there's just no coverage at all. So it all really depends on how your policy reads. I talked about a sub-warranty. So something that's very common in contractors' policies, like those that are custom home builders or just, generally outside of the environmental world, sub-warranties are highly common, but they're now making their way more into the environmental space. And, right, so they're going to require many of those things that I said that you should have listed in your own subcontractor agreement.
So earlier you mentioned pods. You got a little bit into contents. Let's dive down that one, because that's a lot more restoration companies doing contents and getting involved in that. Everybody's trying to find additional revenue streams with it. So what are some of those liabilities around contents handling? What do companies commonly misunderstand?
Yeah, I alluded to it earlier, but it's really minimum limits versus what you actually need. Right? If somebody just says you got to have 250,000, I'd say 9 times out of 10, that's probably not enough if you're in the business of doing contents. If you're full service restoration, you're bringing it back, or you're doing just nothing but contents, 250 is just not going to be enough. Something else of note is, whether it's actual cash value or replacement cost. And I know all contractors are familiar with that. And so probably 95% of the Bailey's forms out there, they'll settle at actual cash value. There are some that are replacement cost, but that's just another one of those things that it's worth reviewing with your agent.
So, and another one you mentioned earlier, kind of let's jump back to, would be the TPAs, the third-party administrators. And we can agree that it looks like the amount of claims with TPAs might be going down, but they're still a huge force in this industry. A lot of people won't touch them. It's your business. There's a lot of people that like them. It's your business. But with that, where do you see TPAs? How have they changed insurance requirements? If I want to do TPA work, what do I need to know for insurance requirements if I'm a restoration company?
That's a good question. I think they've only changed slightly over the years. Most TPAs, even franchisors and insurance carriers, they all have pretty similar requirements. Of course, there's going to be slight nuances, but most are similar. Some may require higher limits for certain services than others. As an example, they may have some limits if you're doing just mitigation and mold versus if you're doing full service with build back. I've seen franchisors have additional requirements, if you're doing reconstruction, or
Mhm.
they might have additional limits required on your excess depending on what your revenue is. I've seen one where, as an example, if you're water and mold, you need $1 million excess. If you're doing reconstruction, you need 5 million excess. And then this same franchisor, every $5 million in revenue you do, they want an extra $1 million of excess. So, somebody that's doing 10 million and they're doing reconstruction, effectively they might need to carry $7 million of excess per that requirement. But those are the nuances. But really, the update that I've seen nearly everyone add is to be specifically named as an additional insured. So I briefly talked about like blanket additional insureds. A lot of the third party administrators or the carriers and things, they want to be named in the policy. They want to just totally make sure that if there was a claim that was caused by the restoration contractor, that TPA can step foot into the policy and make a claim on their policy rather than their own. So many won't accept the blanket, and then you have somebody going, "Hey, why do I got to pay? Call it $250 extra to add, you know, such and such TPA or franchisor to the policy." That's why is they're want to be named in the policy.
Okay. So, uh, risk management or risk control, risk management, clearly passion of yours, and you mentioned that earlier on. That so, where are you seeing from carriers in terms of compliance of documentation, certificates of risk controls?
Yeah, I mean they're all pretty similar. The Like I mentioned earlier, like the backbone of it most are they want to see the indemnity and hold harmless.
Hmm.
Everybody wants to see that you're working with A-rated carriers. You got at least 1 million, 2 million general liability limits. I talked about the additional insureds, but really everything's proper documentation. You mentioned that, like document, document, document. So they're all pretty similar.
Okay. Your opinion: are insurance carriers getting more selective on who they'll insure?
I'd say for mitigation, mold heavy, most environmental carriers have an aggressive appetite for those.
Hmm.
If you're a restore that's heavier on the build back side, it's certainly going to be underwritten heavier. There's going to be more questions from the underwriters. And construction defects, those types of claims are really the biggest fear for most of the underwriters and the insurance carriers. Uh, that, and then, like I mentioned, the claims that are caused by subs, they're going to want to make sure that you do have that proper risk transfer. So they want to see, what does your subcontractor agreement look like? So when we work on any account, if they sub anything out, we want to review that, maybe give a little bit of feedback, and an insurance carrier is going to want to see that.
You think that working with TPAs increases any kind of risk exposure? Anything the owners should be aware of?
That's fair. I'd say not really, but still, anytime that you have to specifically name another company as an additional insured, you are allowing them to step foot into your policy and make a claim on your policy, and that is more exposure. Uh, but same goes anytime that you sign a hold harmless agreement for anybody. But at the end of the day, unless you're getting all your work through direct marketing, if you're, whether you're working with a homeowner, a property manager, commercial building owner, TPA, insurance carrier, all the above, they're all going to require you to add these things that ultimately add exposure. And as cliche as it is, it's true. No risk, no reward. So I'd say not really, but it does increase exposure.
Let's step back from the TPA world, and I think there's a couple business owners that were probably throwing tomatoes at their screen during that discussion. So let's just go back into a general discussion now of restoration business insurance. What are the steps that owners can take today? I need actionable here. What's the steps that owners can take today that could reduce risk in their business?
I think it starts with a full audit of your policies. Right? You need somebody that knows what they're doing, someone to go through every policy form, read through it. Sometimes people try to send you a certificate of insurance that doesn't tell you anything. You need somebody to Go through every line item of exclusions, limitations, and try to negotiate certain ones away, right? So full audit of the policy is the first step. Probably 99% of the people when I review a policy, there's going to be limitations and exclusions they had no idea about. The second piece would be updating your subcontractor agreement. Super easy, especially if you're a client of Violand. Get that sample, share it with your local attorney. That's certainly something that you can reduce your risk immediately. Uh, Safety meetings. I see more and more folks doing bi-monthly safety meetings, tailgates, highly important. Driver safety training. This is something that, as we've been talking about commercial auto, every carrier is talking about. What are you doing for your driver safety training? I think also important, something that can reduce your risk immediately is inward and outward facing dash cams. Tons of companies out there that have these dash cams with a lot of data that you can hold your folks accountable. And then updating your driver manual. In that driver manual, having some strict guidelines that include enforceable penalties if the drivers don't adhere to them. And then another one that will reduce risk for auto, it's called the DMV pull program. And it's not available in every state, but there are similar programs that you need to look into depending on where you're at. But the pull program, essentially, you would put all of your employees into this, and if there's a ticket or an accident or something that happens, maybe you're unaware because this happened in non-working hours. They got a ticket 30 miles an hour of the speed limit, or they got a DUI or something that's going to negatively affect your ability to even get insurance. Oftentimes, most folks are only looking at the MVRs when they hire somebody or at every commercial auto renewal. But if you know somebody is just got a DUI or something, if you have that pull program, that's going to make you a better risk. It's also going to be more attractive to the insurance carriers if you're proactive in that way.
Okay. Are there documentation or internal processes that can make a huge difference in preventing or supporting any of these claims?
Yeah, absolutely. Document. If you don't document, it never happened, right? Pictures. That's one of the best ways to really help support, especially if you think it's like a bogus claim or something. So document. Pictures, those are all good. There's tons of folks out there in the industry that can help with that.
Okay. Are you seeing people get into job hazard analysis? You mentioned the safety training, but proper moisture documentation, anything like that, and being able to reduce liability?
I think it's imperative. It's not really like, can we do this anymore? I think all those are imperative. The more things you do to be proactive, the better. Things like proper moisture documentation they're more of like an industry standard, but companies that are dedicated to safety, they're dedicated to training, where it really becomes part of the culture, they almost always outperform their competitors. And just as important, they're a better risk to the insurance carriers.
Okay. When it comes to driving the cars, because you've gone back to that being one of the biggest issues right now is on the fleet management with it. Do the vehicles themselves play a role into that? The driver behavior, I'm sure, does. But does that mean if I hire an employee and they've got a couple speeding tickets, does that mess with things?
It can, yeah. But as far as the vehicles go, I think it goes without saying, the more expensive the vehicle it is, or the heavier the vehicle it is, it's going to be priced higher because there's more liability. So you have, a light truck versus an extra heavy truck. The heavier truck is going to have more liability because when they get into an accident, they're going to cause more damage. So driver behavior, right? You mentioned training is everything, right? And if you got to be able to document, you got to be able to show the training logs that people signed in, they were there for all of that. Training is imperative.
Okay. I know at our annual business planning retreats we do with our clients and a lot of other companies that are out there, every single year you're at that event, which we appreciate. And I'm always telling people, go over and visit Ross and just have them take a look at your policy. Now's the time. Am I right on that? Is it once a year? How often should restoration companies kind of revisit or audit their insurance policies?
That's a fair question. I think It really depends on who you're working with. Do they focus on your industry? Do they specialize in restoration? If they don't, that may be something that you want to audit those policies every year. Right? It's really like, what kind of trust do you have with them and what they know about your industry? I think that's the biggest key right there.
Okay. Well, let's take this and let's go a little forward looking into the industry, both the industry as a whole, into insurance, and we're going to run up on the clock here a little bit. So just kind of rapid fire a couple questions at you, if that's okay.
Sure.
So where do you see insurance for restoration heading in the next 3 to 5 years?
Just quickly, I think general liability is just going to kind of keep up with inflation. Environmental, I mentioned, has been soft for the last few years. I don't see auto becoming less challenging over the next 3 years at least. In turn, that's going to make excess liability, those umbrella policies, continue to be difficult. There's always going to be new entrants into the market. But I think the top, call it 4 to 6 environmental carriers, they're going to remain the lion's share of the market.
Are there any new coverages emerging owners need to consider as our industry is evolving?
Not so much new coverages, but there's always new exclusions, new limitations you need to be looking out for. Again, I mentioned it earlier, I'd encourage everybody to at least ask their agent about cyber, ask your agent about employment practices liability.
Okay. Those new restoration companies, people who think this is the greatest industry and they're going to make $1 million next year straight into their pocket as soon as they open up and buy a couple DUs. What are you advising the new companies you're working with that are just starting out? What are the insurance mistakes that you tend to see happen that you're warning them ahead of time?
Top 3 mistakes, they're going to be not pushing your risk down. We've talked about that at length. But you got to find the right subs that can give you what you need. Fleet management, that's the second piece. We've been talking a ton about auto, so fleet management. And then folks that are doing more than water, if you're doing some reconstruction, really segregating that payroll on your workers' comp. Too often I see new entities, right? They try to put everything into one code. Audit comes and they're like, oh man, why do I owe 10 grand or 50 grand or whatever the number is? Because they didn't segregate their payroll properly.
Is there one thing out there that you just wish every restoration business owner understood about insurance?
Yeah, I'd say insurance is not an investment. You should not look at it in the same sense that you're ever going to get a return, right? Insurance is there for the extreme accident, of course, right? Something that would hurt you financially if you did not have insurance. But turning in those small claims over and over is going to negatively affect you way more than just call it one big loss.
Okay, so quantity sometimes is going to trump quality in your world?
Yeah, frequency leads to severity. So that means the more small little claims that you have, the underwriter on the other side is looking at it going, the big one's about to pop. Right? So if you have a frequency issue, that's a problem. You have one big claim once every 5, 7, 10 years. It's much easier to explain that and show what you've done to make sure it doesn't happen again.
So this guy's staring at his computer screen going, these people over here are idiots. They're going to screw this up. Let's get them out of here. Is that what happened? All right.
Yeah.
That makes sense. All right. So clearly, Ross, you are you're passionate about what you do. You're exceptionally knowledgeable. If you ever heard Ross speak on stage at any of the industry events, he just goes above and beyond. He works with a lot of our clients and does a fantastic job. Highly recommend Driscoll Driscoll, National E&S, Ross, and his whole team out there. So if somebody needs an audit or somebody has some questions or they want to hear more about what you've got to offer, what's the best way for any of these people to get a hold of you, get in touch, whether it's you or your team?
Yeah, I'm easy to find. It's just a phone call away, a quick email. Our team continues to grow, and I'd be happy to introduce or chat with you, do an audit on the policies. I'm easy to find.
What's the phone number to call?
You can call 661-266-4444, extension 4076. Also, JR, like Junior, at nationaleands.com. You got to spell out and, nationaleands.com.
If you ever at a show with Ross, tell him he needs to take you out to dinner. He knows all the best places to eat. He knows all the best stuff on all the menus. He's a connoisseur of quality food over there, which is amazing because you're so damn skinny, but yet you eat more than anybody I've ever met in my entire life. So what's the final message? Let's wrap it up here. What's the final message that you share with contractors when you're trying to protect the business or even dealing with the changing landscape that's out there in the insurance industry?
Yeah, we'll close with the fact that any risk you don't push down, you're taking it on yourself. So push that down. I joke with, rather than ABC, always be closing, ABV. Always be vigilant. Document it all. And then also just ensure that you have a great team of your trusted advisors. Every good business has a team of trusted advisors, your attorney, your CPA, your insurance agent, and great folks like Violand, having a good consultant, somebody that you can bounce ideas off of.
Well, we appreciate everybody listening to this episode. I know the good podcasters will tell you to like, subscribe, and share, I think is the third one. So whatever they say, do that. We appreciate you listening to this session. Ross, thanks very much for sharing all of that knowledge with the viewers. And we'll see you again here shortly. Thanks, everybody.
Good job. Thank you, everybody.